Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Paris Rapeseed, Winnipeg Canola, and Malaysian palm oil.
Hello and welcome. Before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of the patterns, levels, analysis or any related items on my charts. This was all my own original work, as I think you deserve to have that. So with that, Paris Rapeseed. The key recent pattern is actually two patterns, or rather one valid pattern and an overextension of another pattern, which has this week seemingly been on the verge of taking a twist. I think it would be easier to explain the overextension pattern first. This is the market traveling down for quite some time along the bright red neckline, currently 458 and three quarters, of what looked like a May to August 2025 head and shoulders top. This pattern has breached the neckline back in August and again 3 weeks ago, but with no definitive closes below it. It seemed the market was using this as a route for lower prices rather than exploiting with a full break lower. Then this week, prices took a turn for the upside, with today being the highest high since mid-September, and thus possibly making this head and shoulders top into a head and shoulders continuation pattern. The previously mentioned bright red lower neckline also shows up in the second valid pattern, and in this case it acts as a lower trend line. A nearby bright green upper trend line, currently 469.5, together forming a very shallow July to date descending wedge pattern. This pattern is very shallow and consequently narrows at quite a slow rate, plus it will not reach an apex until early next year. However, as I said last week, and I quote, "Do not expect the market to wait till then, nor expect the market to make a clean break, as the chances of a false break are now quite high, so caution," end of quote. That all being said, we have this week made a seeming break on the upside, and I feel obliged to lay out, if not targets yet, then potentials. Thus, a primary potential will be up in the 489 and 3/4 area, with a secondary harder to reach potential up in the 502 area. Of course, if this becomes a false break on the upside, then I will retire these potentials in a heartbeat. I will note two further features. The first is how the green short medium moving average, currently, 471.5, has been shadowing the bright green upper trend line. And after this break higher, seems to be acting as support today. And the second is how the market had been coiled around the interesting 50% Fibonacci line of the May 23 to January 24 move at 467.25 before moving higher. Topside, we now have the mauve medium moving average, currently at 478.5. We're further up the combination of declining gold long moving average, which is currently at 482.5, plus the dark blue neckline extension to the August to September 2024 reverse head and shoulders pattern, currently also 482.5. Now, I just want to add a quick word about this. It may seem that with these two together, the upside resistance is greater, and that can be the case, but if you're going to punch through the market, it's best to do two of them at the same time than try and go through one and then try and go through another one later on. So just please be aware of that. Winnipeg Canola. The key recent pattern here is, and has been, fairly obvious here for quite some time, is the bright red late June to date bear channel. It's currently 585.40 to 634. The most recent action has seen the market 4 weeks ago spike down to the May 23 low at 611.10 and bounce up from there, though not by far, though it seems the pattern came down to it rather than the market moving up to the pattern. And that was up to today, where we tested the bright red upper bear channel line and pushing up over the 2021 low at 629.5, plus trying to push up over the lesser Fibonacci line at 632.90. What else is notable is that we are below the flatlining gold long moving average, currently 662.90, and we are seeing the green short medium moving average, currently 644.30, shadowing the bright red upper bear channel line, though roughly 10 Canadian dollars higher right now. As I said last week, and I quote, all this may be coming to a cusp, as 2 weeks ago, so that's now 3 weeks ago, prices dropped down to the May 23 low at 611.10 and immediately bounced up. This low is not that significant, but what is significant is that nearby is the 50% absolute Fibonacci line at 606.90. And though this didn't have much effect on prices on the way up back in late March this year, it may now be a different story, at least for now. You see, below this we really don't have that much support until the band 559.40 to 575, which created the low for 2025. And that's the end of the quote. There's also another pattern to consider, and that is to look at the whole mid-April to date action as a possible complex head and shoulders pattern. A really ragged one, with a break lower back in mid-August below the neckline, which is currently 677.40, though I've also previously considered the 38.2% Fibonacci line at 665.70 as a proxy for a possible neckline, or maybe the 50% Fibonacci line for 2025 at 655.70. Whichever. We are still lower, and this laid out a primary target down in the 630.80 zone, which was reached in early September, and a secondary harder to reach target X down in the 585.5 zone, just above the previously mentioned support band. Yet with the current action pressing higher, I'm minded to start considering retiring this harder to reach secondary target that's below. Bursa Malaysia crude palm oil. To start with, as I've done for many months now, I'd like to look at the wide congestion that's overhead between 44.08 to 45.59. We've tried within the last 2.5 weeks to pierce it and so far failed, though we are still hanging around the lower edge of this congestion, supported in the immediate time by the rising green short medium moving average, which is currently at 44.10. Now, as I said 8 weeks ago, and I quote, this overhead resistance is not only resistance but longer term resistance, end of quote. We even have a number of resistances above this overhead band, with the notable ones being a pair of neckline extensions, with one being the dark blue neckline extension, which is currently at 46.27 of the September 2015 to November 2017 head and shoulders top, and the second being the purple neckline extension, currently at 47.07 of the September 2015 to November 23 reverse head and shoulders top. These would be where I would look to see some potential capping action on any small breach higher. They would not stop a true break higher, as we have all the ammunition since May today pressuring higher. That would be no doubt, but be realized that they might still stop a break higher, just a break. Then we have the failed pattern, or should I say maybe failed pattern, but widened and finessed pattern. It was originally the bright red May to September bull channel, currently 45.89 to 48.35. This had been broken, though the market still has not managed to fully let go of the lower broken bull channel line, though it is doing that, and instead has chosen to widen and finesse this pattern for now into a wider bright green June to date bull channel, which is currently 43.89 to 48.54. This is a work that's still under construction, as the top side has had no more than one single touch, and thus treat this newer version of the pattern with care. But it does scan well as a pattern, especially in consideration with the bright red bull channel and if you follow Dow theory. There is one other feature which I would like to discuss, and this came about because I was at the end of June speaking into a presentation at the Biofuels International Conference and Expo in Brussels, Belgium. It was and is to watch out for a key level from now until the end of this year, and that level is 35.99. Now, I know this is quite a way below the market, but still, nevertheless, it is important. You see, if prices push down below 35.99 before the end of this year, which even now is still possible, then we would have set up the conditions here in palm oil to make that rarest of patterns an annual key reversal, with all the implications such a huge long-term pattern may bring. Please watch out for this, as it is important. I will bring you more details should we get down below there, even though I know, as we are today, many hundreds of ringgits above it. Just please bear it in mind, as we still have a few months of this year left to go.
Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.